Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Friday's Eve. Carol Master, Tim Stenovic. We're going to talk about the latest on railroads, unions, representing all those workers coming to, it seems like, an agreement.
Yeah, finally a little bit of good news. We're going to be joined by Kriti Gupta in just a minute. First up, though, let's get a check of the markets. Here's Charlie Pellet.
Hi, thank you very much. All aboard for a choppy session right now. In just a matter of seconds, we saw the Dow go from lower to higher by 18 points, up now by about just about 0.1%. We've got the S&P down 21 right now, lower by 0.5%. NASDAQ minus 104 now, down by 0.9%. The two-year, look at that, 3.86% on the inverted two-year, with the 10-year now 3.45%. Spot gold is down $31 the ounce to $16.65, a decline there of 1.9%, while West Texas Intermediate crude down 3.7% now, 85.20 a barrel. Stocks have resumed declines in choppy trading today. Treasury yields staying higher after the latest batch of economic data did little to dial back expectations for the Fed's next move. Well, as for the overall market backdrop and where we may be heading, Kate Faddis is the Chief Investment Officer of C.T. Mason.
At some point, there's going to be a contrarian play. At some point, the market will get so ugly that the contrarians are going to be willing to step in, and I might be one of the contrarians at that point. Right now, I think it's about asset preservation. I think the market is going to bottom in March. I didn't say March 2023 or March 2024, but think about it. We bottomed in March of 20, March of 09, March of 03. So beware the Ides of March.
Railroads unions reached that tentative deal earlier today. As for the railroad stocks, mixed picture right now. We've got Union Pacific up 1.8%, CSX down 2.5%, Norfolk Southern higher by 1.1%. Our Kriti Gupta will have a whole lot more coming up in just a moment. Adobe buying software design startup Figma in a deal valued at about $20 billion. Adobe plunging now by 16.7%. First day out for Corebridge Financial. Corebridge is AIG's life and retirement business, and we're watching Corebridge down by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. Well, crisis averted, at least it seems that way, as U.S. railroads and unions representing more than 100,000 workers reached a tentative deal, according to the government. It's a breakthrough that looks to avert a labor disruption that risked adding supply chain strain to the world's largest economy. It was just like another thing. Like, are you kidding me?
Yeah, I mean, well, fortunately,
yeah,
it wasn't a joke, but it doesn't seem like things are going to be as bad as they could have been. We got Kriti Gupta joining us right now. She's markets correspondent for Bloomberg. She's also right now on site at Greenville Yard in Jersey City, New Jersey, not that far from us, just right over the Hudson. Kriti, what's the latest about the unions and railroads actually reaching a tentative agreement here?
Well, it kind of seems like there's an all-clear signal here. What's interesting is that about 12 hours ago, that was absolutely not the case. In fact, we were heading for a major halt of the entire U.S. economy, and now it seems to be that the union membership is putting this tentative agreement to a vote. But the key word here, Tim, is tentative, because we're not there yet. Remember, this deal has a wage increase of about 24%. It has bonuses included on ratification of this deal. Those workers will get about an average of $11,000 in bonus just right off the bat for signing that deal. On top of that, they're getting an additional paid day off. They're getting access to more health care without increased costs, something that the railroad carriers themselves were actually pushing for. And arguably more importantly, they're now getting more time off of work for things like surgical procedures, hospitalizations. If they have an emergency and need to take a sick day or need to tend to a family member, they won't be penalized for it, which was the case earlier.
I do wonder, too, how much pressure is, you know, union leaders thinking about this, other industries thinking about this, or the government thinking about whatever happens here, what this might mean for other industries, whether it's retail or something else, about some kind of union agreement.
Well, the contagion effect here, Carol, was so real. But I mean, this isn't new. Also, think about it. Deere, Kellogg, PepsiCo, these are just some of the companies that have been dealing with strikes of some sort, strikes that we haven't seen for decades. And a lot of this have to do with wages. It also has to do with working conditions. And you see this on Wall Street as well, Carol, this idea that perhaps not a strike among junior bankers, but certainly more of a move towards catering to better working conditions, better work-life balance, better health benefits. That is all going to be a structural change in the economy. We were talking to Sarah House, the Wells Fargo economist, earlier on Bloomberg Television, and she said, well, this is something that's getting a little bit hard to quantify now because it's such a structural change you're seeing across industries. And the railroad side of things, Carol, I should say, is kind of the anomaly when it comes to a lot of these sectors. It has the kind of wonky quirk that goes back to legislation, written in 1926. I won't bore you with the details, but basically it just means that some of these things that have been existing in other industries, like a point-based system, for example, where if you are put on call and you don't make it, you're deducted points. That's something that's been in the banking system for a while. It is just now, post-COVID, been introduced to the railroad system. So extra sensitivity in this particular industry as it evolves.
Hey, Creedy, can you just take us through what was at stake here and why this was such a big deal? I mean, we hear figures like $2 billion a day cost to the economy if this strike would have happened.
Oh, and it would have been quite the image, actually, Tim, if this had actually panned out. I mean, freight is about 30% of cargo in the entire United States, and the United States has the largest rail system in the entire world. So let's start with commuting here. We've heard about Amtrak now looking to resume their services as soon as possible, but that would have affected things like commuters going into Chicago, the biggest railroad hub in the entire country. It would have affected things like San Francisco, Minneapolis. There's a train line that goes from Minneapolis into Chicago. It's a major commuter hub, similar to the way that New Jersey commuters hop into New York. That entire thing would have been shut down. So that's just one example. Auto vehicles is something that we've seen specifically here in Greenville in the Yard. Auto vehicles are transported from Mexico, from Detroit, across the country by primarily trains. It's the most efficient way. And here, you actually, as we were coming in about 12 hours ago, we saw a lot of them just parked, new vehicles on trucks, waiting to be loaded, and they were just standing on the sidelines.
I got to say, everyone listening, Creedy, can hear the activity going on in the background there. That sounds like people working, and it sounds like helicopters and airplanes flying overhead as well.
Well,
It certainly was. I mean, the activity, I would say, picked up a little bit in the last couple of hours.
Ah, that's really fascinating. Well, after years, decades of union power, and it feels like authority declining, maybe we're starting to see a little bottoming of that in an upswing. Creedy, thank you so much. Really great reporting. Bloomberg Markets correspondent Creedy Gupta on site at the Greenville Rail Yard in Jersey City. I always think it's fascinating, Tim, and increasingly a high-tech economy, high-tech society we all talk about. And yet, when it comes to moving things around, it's about putting them on trains, putting them on trucks. It's pretty basic.
Yeah, crisis averted
but
for now. But as we talked about yesterday, Carol, a quarter of goods here in the United States are moved by train. It's shocking to a lot of people, I think.
It's still how stuff moves around, right?
Yeah.
And gets across the
Century-old
country.
technology.
Exactly. All right, you are listening to Bloomberg Business Week, watching us on YouTube. Carol Master along with Tim Stanovic, off to World and National News, off to D.C., and off to Nancy Lyons. Hey, Nance.
Thanks, Carol. You all have been discussing it. President Biden is praising negotiators who reached that tentative railway labor agreement. Speaking from the White House Rose Garden earlier today, the president called it a good deal for both sides.
Because of the labor agreement, those rail workers will get better pay, 24% wage increase over the next 5 years, improved working conditions, peace of mind around their health care by capping the cost that workers will have to pay.
President Biden also says he sees signs of progress in lowering costs for everyone. He says with trains moving, food prices won't go up. The House January 6th committee has received a bunch of new evidence ahead of its next public hearing, which is possible next month. Bloomberg's Nathan Hager reports from Washington.
Committee Chair Benny Thompson says there are thousands of exhibits, including texts, chat messages, and radio communications between Secret Service personnel before and during the Capitol riot. Thompson says he can't say yet whether any of the messages are among those thought to have been missing or erased by the Secret Service. He says a number of staffers are working through it right now. The Secret Service says says there are no new text messages in the information given to the committee. It's suggesting Thompson's referring to Microsoft Teams chat logs. In Washington, I'm Nathan Hager, Bloomberg Radio.
Tonight, Amazon is hosting its first official night of Thursday night football that will allow users the ability to see real-time statistics on screen using X-ray technology. Players for the Chiefs and the Chargers will be wearing uniforms enhanced with Amazon Web Services chips, allowing for instant updates. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, coming up, we're going to get into the cover story of Bloomberg Business Week that involves a Chinese spy, General Electric, and kind of the wait what moment in terms of how it played out. In the meantime, there's a lot going on in terms of the backdrop when it comes to U.S.-China relations.
Yeah, China's envoy to the U.S. warns against cutting the nation out of the EV chain. We're talking about China's ambassador to the U.S., warning that the potential risks of trying to cut the country off, using a visit to the Detroit Auto Show to highlight the intertwined, that's a quote, interests of the world's two biggest economies.
Yeah, we're talking about Qin Gong saying in an interview at the auto show yesterday, the quote, to decouple with China means to disconnect from the world's largest market as well as the biggest opportunity. The interests of both nations are, quote, intertwined, he said, pointing out that General Motors' latest models are, quote, designed, developed, produced, and to be sold in China, while more China-built cars are being exported to the rest of the world. And we know, there are a lot of tensions between the China and the U.S., especially when it comes to trade. Really, I feel like they've been ongoing for a long time, but they really exacerbated under President Trump, and to some extent have continued under President Biden.
They have, and that was the point that we made yesterday with Joel and Christina in our studio, and you can catch in this weekend's show an excerpt from that interview. But it's in the current issue of Bloomberg Business Week, a story about the way that China is trying to get, Chinese companies are trying to get around U.S. tariffs by locating facilities just south of the U.S.-Mexico border.
Yeah, really fascinating about how nimble companies can be. And she said that there were a lot of smaller companies, but that even, I think, some news is coming about a much larger player, a Chinese player looking to do that. China and the U.S. sparring on several trade fronts. The Biden administration earlier this month saying it will allow Trump-era tariffs on hundreds of billions of dollars of Chinese imports to continue while it reviews the need for the duties. And we know this goes back and forth.
Well, speaking of the U.S., President Biden attended the auto show earlier in the day. A lot of clips of this going around. He got in a Corvette, revved it up. He also got in an EV as well.
Yeah, I mean, if you want to think about Americana, you think of the good old U.S. automakers, and you do think of Detroit, and you think of that auto show. All right, more to come on China and the cover story of Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a choppy session with the Dow, the S&P, NASDAQ all in the red right now. The curve inversion is deepening right to the 2-year. The yield now 3.86%. The 10-year yield 3.45%. Equities lower across the board. S&P down 30, drop right now of 0.8%. Dow Industrials down 60, a decline of 0.2%. The NASDAQ Composite Index down 130, a drop there of 1.1%. Spot gold is down $33 the ounce to $16.63 now, a drop there of 2%, while West Texas Intermediate crude down 3.8%, $85.14 a barrel. Stocks are resuming declines in choppy trading. Treasury yields stay higher after the latest batch of economic data did little to dial back expectations for the Fed's next move. Speaking of the next move, the Walt Disney Company has pulled the upcoming Star Wars film Rogue Squadron from its 2023 release calendar, a disappointment for theaters still trying to recover from the pandemic. Walt Disney shares down now by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. Well, the new issue of Bloomberg Business Week, it is out. It is on newsstands. It's online at Bloomberg.com/businessweek, and of course on the Bloomberg terminal. And the cover story this week is about the Chinese spy that wanted GE secrets, but the U.S. got China's instead. It's one of those, wait, what moments?
Yeah, it really is. It's a story that has all the trappings of a spy movie. We've got meetings in hotel rooms, copying hard drives, data gleaned from iPhones, and a political adversary looking for industrial secrets. Jordan Robertson and Drake Bennett wrote the piece. As Carol mentioned, it's the cover of Bloomberg Business Week this week. We got Drake Bennett, technology reporter for Bloomberg Business Week, with us right now in the Bloomberg Interactive Brokers studios. Also with us is Joel Weber, the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studios. Joel, I want to start with you and just give us an idea about how a story like this comes together. Because, as I mentioned, it's got all the trappings of a spy movie.
How quickly did you say, yes, do it?
I'm so excited about this story. It is just marvelous. So whenever you talk about China and U.S. and intellectual property and what companies have, you know, there's always been this assumption that, and reporting has suggested that Chinese are really good at spying and stealing stuff. But we never really get a sense of what that actually looks like. And so when Jordan and Drake came to us with this story, the thing that just jumped out at us was, it's all there. We have all the reporting. And it's in part because of this cat and mouse game that evolved that I'm sure Drake's going to tell us about. And it ended up in court. And because the U.S. was able to not only nab this Chinese spy and his phone, we got it all. We got all the info. And Jordan and Drake kind of pieced it all together and told this story that reads like you're going to watch this on TV someday. And so, Drake, I mean, like, you know, this is raw stuff that you ran across. And I'm curious, just like when you saw it and Jordan saw it, like, how did it pop to you guys?
I mean, like you said, it's just an extraordinary opportunity because this is normally just a black box. You just see kind of the outgoing stuff where it's the companies that are being targeted or it's the people that are being, you know, targeted as potential sources, and you never get to see what goes on back in China. And what happened with this guy is he was, you know, the first ever MSS officer to be lured out of China.
MSS, explain what that is.
Oh, Ministry of State Security. So it's basically
Chinese government?
Chinese, intelligence, which is responsible not only for military and government intelligence, but, you know, economic.
And that's not exactly a secret.
No, it's
like,
not a secret. Not a secret. We know what happens. We know a lot less about what it looks like. And so when this guy gets lured out through this very painstaking FBI investigation, he's arrested and he has his phone on him and his iPhone on him, and he has backed up everything. Just everything to the cloud. So there's all this like sensitive, MSS documents. There's correspondence between him and his colleagues, between him and his sources. And there's also just a lot of like really intimate personal detail about himself.
Tell us more.
He's someone, there's a lot of like cloak.
What's his name again?
His name is Zhu Yanzhen. And he's, a lot, there's some cloak and dagger stuff in the story, but a lot of it is also just he's this espionage bureaucrat, and he's sort of like, you watch him get sort of like ground down by his job, and he gets more and more unhinged, and he's just spending all this time in like massage parlors and in drunken card. You watch him get sort of like ground down by his job, and he gets more and more unhinged, and he's just spending all this time in like massage parlors and in drunken card games. And I think that may have sort of, affected his decision-making a little bit.
I'm not going to say quiet quitting.
No,
okay?
no. The U.S. quiet quit for him. Tell us about the expense accounts.
Right. So he actually, in theory, these guys, a lot of
unlimited budgets, right? Just like whatever you need.
Yeah. So in theory, they have
these
exactly. They a lot of what they do is they're just handing people money, $3,000, $6,000 for your travel expenses or for whatever. But one of his sort of gripes over time, and it gnaws at him more and more, is that his boss just keeps rejecting these expense accounts for these dinners he has to like recruit people, and it just really drives him nuts. Because we have his diary, he treated his iCalendar basically as like a diary. So there's stuff about meeting with this person or doing this hack, and then it's just like, my boss rejected the expenses again, and he just like, it clearly just burns him.
So, which are just epic, It's like you just assume like we take on the U.S. anything you need, and then it's like actually this meal was $12.95.
Yeah,
you had $7.50 at that meal.
Yeah, right.
The target that ends up being so much of the story is actually GE, right? What was the spy going for, and tell us about how that played out.
So it's GE jet engines, and in particular it's these. Composite fan blade and casings for the fan blades. So GE Aviation is still basically the only company that has these super lightweight fan blades and casings, so their engines can be lighter, more fuel efficient, safer, and so basically this is a key technology that Zhu had sort of focused on, and he sort of arrives at this through these conversations with folks in the Chinese government, with folks at state-owned aeronautics companies in China. And so so he, through this intermediary, through this academic, basically, a university official, reaches out to this engineer at GE Aviation, through LinkedIn, invites him to come give this talk, and then it sort of begins. What he doesn't realize is that midway through this process, the FBI sort of intervenes and starts investigating his potential source at GE Aviation, who then, not to spoil the end of the story, but who ends up being very instrumental in the investigation to then turn around and trap Zhu himself.
Our producer said one of the stupidest or dumbest spies ever.
You just got sloppy. Just a little bit sloppy.
A couple big mistakes.
I think that was one of the most interesting takeaways from this, is like the idea that people have in their heads of a James Bond type figure.
Right.
What is the life of a spy, just in the last minute that we have with you?
Yeah, he's a bureaucrat. He's an espionage bureaucrat. He's a cog in this big machine. In certain ways, I think he has a lot of power back home, and he sort of seems to abuse it in certain ways, but he also has this boss that's on him all the time, who's like constantly demanding these things that he feels like are really unreasonable. And so it's a bit of a grim existence in certain ways, and I think it sort of drives him a little around the bend.
No martinis, no Aston Martins.
No, definitely not. No.
There are maybe martinis.
But they're not getting paid.
But
They're
not
getting paid
reimbursed.
He got one trip out of the country. He got to go to Belgium, and then,
Yeah, that's right. One way.
Oh, my goodness. It is a great read.
We're saying, where is he now? In jail?
Oh, he's in jail in Ohio. He's awaiting sentencing.
Yeah.
We'll come back once we know more.
Yeah, exactly. To be continued, but it's a great read. It is the cover story of the new issue of Bloomberg Businessweek, as we mentioned. It is online on the Bloomberg on newsstands. Our thanks to Bloomberg Businessweek editor Joel Weber and Businessweek technology reporter Drake Bennett joining us. Check out his story. You're listening to Bloomberg Businessweek. Carol Master, Tim Stanovic, and this is Bloomberg Radio.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. We together, as we do day in, day out, welcome our audiences, TV, radio, YouTube, to a market that has now found a direction, Carol, and it is lower.
Yeah, absolutely, definitively. After bouncing around all day, I was looking for some outperformance. I like to be glass half full when we look at the markets. Right now, the KBW Bank Index.
Romain's face when you say that is priceless.
Sorry.
Whose face?
Romain's face is always priceless.
I'll have to go back and watch that.
There's
I just
no
got a
Botox.
facial.
There's no Botox happening here. Okay, KBW Bank Index, check it out, up almost 2% in today's session. Thank you, Mike Mayo of Wells Fargo, well-known bank analyst, and he says lackluster performance by U.S. bank stocks is out of sync with their otherwise strong underlying fundamentals. So he certainly gave some juice to the sector here, Tim.
I'm also looking for outperformance, and we saw a little more before we saw the greater market take a wider swing down. Norfolk Southern, I'm watching railroads, also Union Pacific. They're both in the green. Norfolk Southern up by more than 0.2%. Union Pacific up by 0.9%. It appears that a crisis has been averted. It did take 20 hours of talks between railroad and union representatives, successfully concluding early this morning. It's not done yet. It's tentative at this point, but it appears that things are going in the right direction.
You two optimists out there. I'm going to have to go negative now because I'm looking at benchmarks that are down across the board. You find the lights of green, but at the moment on the S&P, there's only 168 stocks that are higher. 332 are lower, and we dragged down by a percentage point, 39 points to the downside. The Dow is off by 0.4%. The NASDAQ, so big tech, once again, those growth stocks really under pressure, off by 1.3%. That's 154 points. The Russell 2000, Taylor, off by half a percentage point at the moment.
You really get that feel of the tilt to the downside in the last couple hours or so from the individual sector levels as well. Take a look at this. Healthcare and financials, the only two sectors in the green. I've been hearing more and more healthcare, a little bit more of that defensive play that is the relative attractive sector. So you're at least seeing that narrative play out today. Financials, an interesting story. I think Mike Mayo had a note out earlier that we can get to later about maybe some of the mispricing within the financial sector.
Are you not
for
listening
now.
to Carol?
Are you not? Are you just watching my face and not listening?
Sorry, I was still focused on Romain's
So
face.
hurt. Oh, it's Romain's face.
She's looking at yields, really, is what you were looking at.
Down here to the bottom of the screen, energy and technology here, the clear underperformer.
Well, let's start at the bottom of the screen. I thought this was interesting. We kind of missed this yesterday after the bells. Arconic actually came out with some preliminary results. This is the big maker of aluminum sheet metal, primarily used in cars. Remember, this used to be part of Alcoa way back when, prior to 2016, I believe. Down 15% here on the day. Biggest decline that we've seen since this company was spun off back in April of 2020. It gave a pretty dire warning about demand. And then we actually heard from a lot of other steel companies out there, including U.S. Steel, Nucor, and a couple of others, basically, and Steel Dynamics, kind of reiterating what they also heard from Arconic, the aluminum makers. So something to keep an eye on, at least when it comes to the industrial sector here and what's getting built and maybe what's not getting built. The bottom of your screen, Beyond Meat, down 2% here on the day, 1975. Remember all the to-do we made about this company when it went public a few years ago at 25. Not only is it below that IPO price, but at 1975, that's a record low. And I'll end on a bright spot in honor of Carol and her new facial. Humana, actually one of the outperformers here on the day. Humana shares up 8%. They actually gave a pretty bullish outlook here, basically saying that they're targeting a 14% annual compounded growth rate in adjusted earnings, of course, because no one does real earnings. But they say that they can hit that by 2025 in the street. Seems to think they can do it. Shares up 8%.
In sharers, financials doing well today. Let's look at the TINA trade, because Taylor, you always bring us to this, of sort of where a yield currently on a 10-year is pointing us over 3.45 is where we see it. Let's look at the premium thereof, or lack it might be, on the S&P at the moment. Assuming rates stay relatively high, equity prices, we understand, will need to drop, or indeed earnings, they need to rise to bring these equity earnings premium back in line, basically, with a 10-year average at the moment. Of course, it has been down when you look at an earnings yield from an equity perspective, taking away the 10-year yield, as I say, that's at 3.455.
I got to say, Caroline, love that chart. I think that's what we see in the trade constantly among investors, that they're thinking about valuations based on the data flow. And on that, Sharon Bell weighing in. She's over at Goldman Sachs. She's their strategist. And earlier on Bloomberg TV today, she warned against buying the dip in stock. She says it's not sufficient to see the markets turn. She added that valuations need to get cheaper, still particularly in the United States. She says multiples we're on at the moment are still quite stretched. And she says the current bear market has further to go. And we heard that also from Sanford C. Bernstein yesterday, too.
I was going to say that. I mean, if there's one theme this week that has really drawn together our markets guess, our drive to the close guess just before the markets close, is proceed with caution for the remainder of the year until we get more of an idea of what the Fed is going to do, but also what we hear from these companies. If we do start to see revisions to the downside when it comes to the way they're thinking about their own economic outlook.
What did you guys think of that Ray Dalio post? I guess it was on Tuesday on LinkedIn, where he kind of talked about, and he talked specifically about sort of where the Fed would have to end up. I think he said somewhere between 4.5 and 6%, which of course in his view basically would just absolutely kill the stock market here. And he talked a lot about how that would also kill sort of private sector credit growth as well. I mean, obviously he has a sort of incentive to sort of look at the world from, I guess, a little bit more of a glass half empty perspective, but he's been right in the past, and I thought it was interesting commentary.
I did, especially when you think about where the Fed ends up and what that terminal rate is. Deutsche Bank had come out with a new forecast. Their economists, they're talking about a terminal rate, raising that forecast now to 4.9%. So really thinking that if we don't go faster in September, November, December, we're just going to be going longer and holding up higher than we thought for longer than we previously expected.
And there we were yesterday debating Mark Mobius and his call for 9% overall on the Fed. But it is notable that we still have a very resilient jobs market. The jobless claims coming down. It gives the Fed the breathing room. Maybe that's why, once again, we're selling off, even though we've had a pretty murky economic picture today.
Taylor, I'm going to bring in that Mike Mayo note, because he said loans that are 32 days past due remain near all-time lows and well below where they have been at the start of prior recessions, which is why he says he thinks bank stocks, their prices don't reflect really the optimism in terms of some of the fundamentals for these names. So again, it's kind of this mixed picture of people in terms of what they think of the outlook.
Yeah, but it's really confusing because apart from inflation continuing to be hot, which we know is the Fed's priority, and the job market remaining strong, we are seeing indications of significant softening in other areas. So when are we going to start to see the job that actually show up in the jobs numbers that we get? Because it certainly hasn't yet.
Well, and the job market can hold up in theory, right? But the big question here, and I guess this is more looking at historical data here, Carol, the idea that the Fed has never really accomplished what Jay Powell seems to be trying to accomplish without completely decimating the unemployment rate. The idea here is that he can pull off a soft landing. I don't know how soft it's going to be, at least when you look at sort of the historical picture.
Because many people say when it starts to come down in terms of things, inflation, and then the job market, things are going to happen fast, and you do wonder what that means for the labor market. Folks, we're going to come back, continue our conversation beyond the bell. We're going to count you down on radio, TV, and YouTube. We're going to count you down to the close on this Thursday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Carol Massar, Tim Stenovic, live on Bloomberg Business Week on radio and YouTube. What are you thinking?
I'm thinking that it's so confusing out there because of all this different economic data that we're getting. It's not painting a clear picture. I think murky is the term that Caroline used, and I would agree with that. The one area where we're still not seeing softness is jobs. And everyone we talk to, and the data back this up, it's like, if you want a job, that job is out there.
Right, exactly. I mean, it's funny, I've been just talking to people just over the summer. I think these were some of the stories we covered, whether it comes to lifeguards or just, like just jobs that would normally be filled easily. There just aren't workers out there, and we just see it in kind of all walks of life. It is hard, though, to square that with companies who say we're going to slow hiring or we're letting workers go. So I don't know.
And at job cuts in the Bloomberg terminal, it pulls up stories about job cuts. There are many just today. BMO Capital Markets said to cut jobs amid a downturn in business. We saw Bed Bath & Beyond cutting 56 stores in its latest turnaround move. More, that's not showing up in the data yet, though.
And go back to that Mike Mayo note where he just basically says bank stocks out of sync with the fundamentals, and he talks specifically, about loans 30 days past due. I like this, remain near all-time lows and well below where they've been at the start of prior recessions. I mean, when you start to try to figure out what happens in the economy next, it's metrics like this that can be very telling. Doesn't mean things couldn't change quickly, but we've got to watch a lot of things, and he feels confident that, if the banking sector is doing doing okay, and he feels confident about it. Like that to me says strength rather than weakness.
Speaking of confidence, we'll get a measure on confidence tomorrow when we get those UMich numbers.
All right, right now, back to World and National News and Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Florida Governor Ron DeSantis is doubling down on his decision to send 2 unannounced plane loads of undocumented migrants from Florida to Martha's Vineyard this week. He's been criticized for what some say is a publicity stunt.
We are not a sanctuary state, and it's better to be able to go to a sanctuary jurisdiction. And yes, we will help facilitate that transport for you to be able to go to greener pastures.
DeSantis spoke during a jobs event earlier today. The JFK Library is tweeting a flashback today about reverse freedom rides in the early 60s, in which Southern white citizen councils gave black people one-way tickets to northern cities with false promises of jobs and housing. President Biden says he is pleased that a last-minute agreement was reached between the freight railroads and their unions. Bloomberg's Irv Chapman reports the president did give some credit for those in his administration who helped in the marathon negotiations.
The president endorsed the deal that was reached after 20 hours of continuous talks.
This agreement is a big win for America, and this is a great deal for both sides, in my view. With this agreement, railroad companies will be able to retain and recruit workers to operate effectively as a vital piece of our economy.
The president suggested the rail workers should be pleased with the resolution of health care issues that were a major sticking point. In Washington, Irv Chapman, Bloomberg Radio.
A Senate vote on legislation to ensure federal recognition of same-sex marriage is being delayed until after November's midterms. One of the bill's lead sponsors, Senator Tammy Baldwin, says she's continuing to seek enough Republican votes to get the bill passed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much. Nancy Lyons in our 991 newsroom in Washington, D.C. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Broker studio. And we've been talking about this. Adobe shares, they are under pressure, pretty much staying near their lows of the day, down about 17% as we speak. And this is after they do a big deal.
Yeah, the company agreeing to buy the software design startup Figma in a deal valued at about $20 billion. That's quite the startup, Carol, $20 billion. Yeah. In a bid to expand its suite of creative tools. It was announced by Adobe, this deal. It's a mix of half cash and half stock. It does confirm an earlier Bloomberg report that would mark the biggest ever takeover of a private software company. That's according to data compiled by Bloomberg.
Now, no surprise that we sometimes see the acquirer take a hit when we see an M&A deal, and particularly acquisition. Yeah, this is a pretty big move to the downside. Figma, if you want to know what they do, they allow customers to collaborate on software as they build it. They did see demand jump during the pandemic while more people worked remotely. Company expanding its customer base in recent years from software designers at big companies such as Airbnb, Google, Herman Miller, and Kimberly Clark to also include individuals building lightweight games, maps, and presentations. It has also attracted a loyal student following.
Yeah, the company, Adobe's CEO, saying the combination of benefits literally anybody who is a knowledge worker. Adobe has been a Wall Street favorite for more than a decade, but it's pummeled when it's come to this tech downturn, seeing its shares lose more than a third of their value just since the start of 2022. Investors have become increasingly skeptical about the dominance of the company's line of software for design professionals, which makes up about 60% of its revenue.
So here's the deal. This is why maybe investors are saying, Adobe, we don't really love this. There is some concern about what Adobe is paying. It is Adobe's biggest acquisition. Market finding the deal expensive, and so we did see the stock down as much as 18%. It's just off of that, but staying near its lows. It's the steepest decline for Adobe shares in more than 2 years. So
but
investors have spoken.
Okay, but glass is half full if you were an investor in Figma. Yeah. The company was last valued at $10 billion. That was about a year ago. Kleiner Perkins, Index Ventures, Greylock are some of the VC firms that have backed it.
All right, you are listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and you are listening and watching Bloomberg Radio.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. The curve inversion is deepening. Stocks trading at or near the lows of the day. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is. We welcome back Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks selling off here as the S&P 500 tests the key 3,900 level. Dow's currently down 205 points, S&P's dropped 51, and NASDAQ is lower by 198. The U.S. 10-year yield at 3.45%. Gold is sinking 2%. Oil is also down, and Bitcoin is falling by 1%. Among the main 11 S&P sectors, only healthcare and financials were in the green, and leaders had the upside in the Dow, United Health, and J.P. Morgan, while Salesforce and Microsoft led to the downside. In deal news, Adobe plunged 17% after a deal to buy Figma for $20 billion, and the Boeing CEO sees the risk of high inflation lingering for the next 5 years. Wrapping things up, mortgage rates in the U.S. climbed above 6% for the first time since 2008. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Going to be very interesting to see how things shake out with the S&P trading below 3,900 to hear live breaking news over your Bloomberg. Type SQUAWK, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. You are listening and watching Bloomberg Business Week on, it's a pretty busy Thursday, and we're having fun with our next guest. Not a guest, she's actually family. She sometimes subs in for us. She covers it when we're out, and she's got her hands in so many different pots. We're talking about Katie Greifeld, Bloomberg News senior markets reporter, co-host of ETF IQ on Bloomberg TV, and Tim, she wrote about a really big event that happened last night.
Le Merge.
Were you awake? We were all
How did your merge
sleeping.
go?
I asked Carol that too, and she said she was asleep, and I said I was as well.
I think it was finalized, completed, actually closed the book at 2:43 a.m.
But that kind of makes sense for
Did you
crypto.
stay up for it?
No. But listen, when I woke up, I was all over it.
Okay, so for people whose heads are spinning right now, being like, okay,
what are
they talking about here? Tell us what the merge is when it comes to Ethereum.
So we are talking about the Ethereum blockchain. You probably know Ether, I hope. It's the second biggest cryptocurrency, second to Bitcoin. It operates, of course, on the Ethereum blockchain, which underwent this big revamp, 7 years in the making last night, from a proof of work consensus mechanism to proof of stake. And that sounds really in the weeds, and it is, but proof of work is how Bitcoins are mined and how Ethers were mined, and it takes up a lot of energy, which you've probably heard about Bitcoin's energy consumption being a point of contention. Proof of stake is much more energy efficient, and proponents say that by moving to proof of stake, the Ethereum energy consumption is going to be cut by 99%.
Okay, just because I feel like part of our process is to educate. So proof of work is what? Showing the actual mechanisms of this versus proof of stake just saying...
The way that new baby Bitcoins are born is through...
No, stay with us, everybody.
Is through proof of work, where basically Bitcoin miners have to solve increasingly complex problems to make and validate new Bitcoin. And that wasn't really a problem time when Bitcoin was under $100, worth pennies, as
Right.
it was for a long time. But that takes up increasingly more and more energy. You have like these arms races between miners to solve those problems. So, I mean, you often hear comparisons like Bitcoin's energy consumption is that of a small country. I
Or
know
even a big country.
even a big
like
country.
the entire country of Argentina or Ukraine is the latest.
Or several small
So-
countries if
Yeah.
you add them together.
So
that's
proof
true.
of stake then is what?
Yeah, proof of stake basically you have a bunch of ether and you become a validator by staking your ether, basically putting up your ether. If you put up 32 ether, you become a validator. And if you don't have 32 ether, and ether goes right now for around
Is this Game of
$1,500.
Thrones? Is this what's
Doesn't
going
it
on?
sound?
It totally
I mean, you
does.
have to sort of suspend your disbelief here, but stick with me. So you can, if you don't have 32 ether to put up and become a validator, you can join up with your buddies and become a joint validator. But the sort of net effect that the average person needs to know is proof of stake. It's much less energy intensive.
So it raises the question about dominance when it comes to crypto here. And the idea that, okay, well, if Ethereum successfully pulled off this merge and it indeed uses 99% less energy on a proof of stake model than a proof of work model, does that mean it's going to be the crypto that is sort of crowned king?
Ether maxis would certainly hope so.
These are
Those
people who are
maximalists.
all in.
Yeah, people who really treat this as a religion. And there is this sort of event that hasn't happened yet. It's called the flippening. In
The
which
what?
The flippening. I said that to Paul Sweeney yesterday.
Control room. Are we just? Is she just making up stuff as we go?
Wouldn't it be fun? Yeah, welcome to
No, she's
Katie
not.
Thoughts. But the flippening, it's when Ether's market cap will overtake that of Bitcoin. Bitcoin still, it has twice the market cap.
Can Bitcoin do the same thing?
Yeah.
Can Bitcoin do the same thing?
That's a question that I've asked. And the thing about proof of stake, even though it really cuts down on energy use, it's not as tried and tested as proof of work. We know proof of work works. We know that it's hard to hack. People are really worried about sort of the security, potential vulnerabilities with proof of stake. And you have to get the whole network to agree to do this. And Ethereum did, but there's a lot of hardcore Bitcoin maximalists who don't want to do that, who say that this is sort of the price you pay for the security that the Bitcoin blockchain, as it operates right now, provides you.
When will we know if this works?
It's a good question. We know at least that this initial phase, this big milestone, is passed, but in the weeks to come, it's going to be really interesting. So there are these sort of forks that are created. You're going to have copies of Ethereum that will spring up, that will still use mining. It's not a perfect, complete switch. So it'll be interesting to see how that operates. You did have a lot of exchanges and wallets sort of cease Ethereum activity leading up to the merge. Those have to come back online. We haven't seen any problems that I know of so far. But
the first time there's a security blip, I mean, that to me is the huge issue, right?
Yeah.
Ultimately.
And people will seize on that. And of course, the proof of work believers, the Bitcoin maximalists, will also seize on that. But again, we haven't seen evidence of that yet. What's interesting to me, if you look at today's price action, though, Ether has been rallying like crazy since mid-June. Until
today.
right now,
Yeah.
it is shaping
I
up to be
know.
a sell the news event. You have Ether down about 6.7%. If you look at what Bitcoin is doing, it's only down about 1%.
Were there questions still in just the last 30 seconds we have with you if this was actually going to be successful, if the merge was actually going to happen?
There were questions. You had a lot of people shorting Ether heading up into this, sort of hedging the possibility that there will be a glitch because software updates, it's not perfect.
No, really?
I've heard
No, I'm
that.
just kidding. I'm just
Breaking
kidding.
news.
Y2K was fine.
So well told, so well reported. I know it's something you continue to keep a track on. Katie Greifeld, Bloomberg News senior markets reporter, co-host of ETF IQ on Bloomberg TV, which is why she knows so much also about Bitcoin and all that good stuff. I have a feeling she was up late waiting for the merge to happen. I think she was awake, wide awake. All right, you're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovec, and the new ranking when it comes to this year's Best B Schools, it is out. We're not going to tell you who's number one.
I'm not going to tell you.
Don't do it.
No,
Don't
we
do
got that
it.
coming up, and Dimitri's going to tell us all about that in just a few minutes. First, though, Charlie Pellet, tell us what's going on in the markets.
And we are at the lows of the day. Tim and Carol with the Dow, the S&P, NASDAQ all slumping. 28 minutes to go ahead of the closing bell here. Stocks sinking to session lows. Treasury yields stayed higher after the latest batch of economic data did little to dial back expectations for the Federal Reserve's next move. S&P broke down through 3,900, a level the benchmark had approached 3 different times today before holding its ground. But right now we have got the S&P at 3894, a decline of 51 points, down 1.3%. Got to keep it locked into Bloomberg Radio right through the closing bell to see how things shake out, and of course how Asian markets will react tonight. Again, the S&P at 3895, the Dow down 213, now down by 0.7%. NASDAQ down 198, a drop right now of 1.7%. The inverted 2-year 3.85%, the 10-year 3.45%. Spot gold down $34 the ounce to $16.62 now. That's a drop of 2%. Bitcoin down 1% right now, and West Texas Intermediate crude down 3.9%, 85.05 a barrel. As for the market backdrop, Lisa Erickson is head of traditional investments at U.S. Bank Wealth Management.
We've got the stock market in what I would call no man's land, and it's really because we are in a horse race to see how quickly inflation can come down and to what level. And ahead of that, people are just anxious about which way the data is going to go and really how the Federal Reserve is going to react to that.
Briefly, the U.S. Consumer Financial Protection Bureau is out with a sweeping report warning that the burgeoning buy now, pay later industry needs fresh regulation to address industry practices. Shares of Affirm down now by 2.3%. Block, the old Square, it is up by 0.4%. PayPal down 1.5%. And that's a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. As Charlie mentioned, stocks are just coming off their lows of this session, but definitely those losses deepening. Well, Bloomberg Business Week is a go-to magazine for so many things. In-depth features, as you heard earlier with Drake Bennett, tech trends, economic theory, financial markets, politics, and of course, the annual ranking of the world's top MBA programs. And the latest list, it is out online.
We got Dimitra Kesanides with us. She is the one behind the Bloomberg Business Week Best B Schools of 2022 to 2023. She's senior editor at Bloomberg News. She's with us right now in the Bloomberg Interactive Broker Studio. Dimitra, I'm going to give you the honor of revealing the top spot here.
Drum roll, please. Stanford is the #1 school this year.
Wait a second.
Deja
They did it last year.
Wait, this is not last year. This is 2022.
Okay.
Stanford has been the #1 school for a few years running now. So no surprise, it's got a lot going for it that is very much about what people are looking for today. The classic industry draws, the proximity to the tech industry, very strong programs, very entrepreneurial programs. On every point, it's really hitting the marks. So it's doing great. And then tie for second place, University of Chicago and Harvard. And the top 5 get rounded out with Northwestern and Dartmouth.
How often does the top 5 kind of stay the same?
I mean, I would say that it stays the same for a few years running with some minor shifts among the schools. This year, the top 10 were all the same schools as last year. 1 or 2 went down 1 or 2 went up 1, that's what you're dealing with. There are also very minor differences, I want to say, at those levels in this ranking. Like, even though you're #1 or #2 or #5, the points that are separating you from that next school are small and few.
Unless it's 1 between #1 and numbers 2, 3, 4, and 5.
Right. 1 is always very far ahead of the
Well, that's what's
10.
so interesting. 88 is the score that Stanford got. I'm wondering when it came to diversity, what the list looks like, because you click on that. And by the way, This is the type of thing to go check out on Bloomberg.com or look at it on the Bloomberg terminal because it is a great interactive feature here.
It's so funny because our producer will be like, should we print off the story? And
Yeah.
that's what we said. It's
Like, don't
it's
print
so
this one.
interactive because
Yeah.
you really want to go online with it.
Exactly.
It's
And
great. It is. I think they've been. I just want to say first,
Yeah.
I'm not the one. There's a huge team behind this, and the real people who are actually doing this are the ones compiling, looking at the data and building these amazing interactive tools. So definitely go to bloomberg.com/business-schools, and you will have an incredible experience. But diversity, yeah.
Well, it's interesting, and diversity is measured in different ways here, and you can actually filter it in different ways here. But what does the rank look like when it comes to diversity?
Well, I would say it's mixed. So we're looking at diversity in terms of gender diversity, and then breakdowns with Black students and Hispanic students. And we say this in our overview too. The schools have. If there's one area where we feel like there's a little bit of work to be done, it's in working towards that parity. So parity is when you're trying to sort of reach relative equality among certain groups. You have 7 schools only where there was gender parity that was met this year. 11 where Black students had parity with other groups, and 8 schools for Hispanics. So it's not really, there's a ways to go, and I think in some ways now we're starting to talk about how B schools, are they not even reflective of what's happening out in the world? There's so much talk and pressure, ESG, equality, diversity in the ranks of the C-suites. And so that pressure, I think, is trickling over to the schools now to ensure that they are focused on getting those numbers up there.
I am curious about the pandemic because it was tricky, right? Obviously, the pandemic, anybody in academia, and how that has at all impacted rankings or how you guys are looking at the different schools and the programs.
I don't know that they've meaningfully affected the rankings, especially this year. We did come back with the rankings after a year off last year, right? Fall of 21 for 2021. But I think the pandemic has affected a lot of things on campus as we're talking to people, hearing about the priorities of students, the interests that are starting to emerge career-wise. The classics are always there, consulting, finance, technology, but now ESG is a big one. Climate change is a big one. The pandemic and being home and experiencing life for 2 years in very different ways has focused people on different things, interest in certain healthcare careers, and how we're going to move forward from this age of COVID, maybe other pandemics, and what kind of opportunities are out there. I also think it's really focused the schools and the students on how they teach and how they learn. So everybody values in person. I don't think that's ever going away.
I agree.
But now people know that flexibility is possible, and there are really many different ways that you can fashion how learning is going to happen.
Well, when you say in person too, and I know we have to wrap up, and I do highly recommend people go online because it's just so cool to kind of click through the different schools and get their rankings and just break it down in so many different ways. But I do think in school, especially when you think about business schools, so much of it is outside entrepreneurs, successful entrepreneurs, business people who come in to speak, and you get FaceTime. Tim, you know it firsthand when you're up at Columbia, how important that is. Demetra, we have to run, but thank you so much. Demetra Casanidi, she's senior editor at Bloomberg News, and check out that MBA rankings of Business Week.
Let's get to world and national news. For that, we go to Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. A ratification vote is still needed on a new labor agreement between railroads and freight workers, but President Biden is relieved a strike has been averted.
This agreement allows us to continue to rebuild a better America with an economy that truly works for working people and their families. Today is a win, and I mean this sincerely, a win for America.
The deal includes a 24% wage increase over 5 years and time off for medical needs. President Biden's popularity improved substantially from his lowest point this summer, but concerns about his handling of the economy persist. This is according to a poll from the AP Nork Center for Public Affairs Research. Support for Biden recovered from a low of 36% in July to 45% now. Larry Sabato heads up the Center for Politics at the University of Virginia.
It's the first time in modern history that a president has gained points during the final stage of a midterm election. Usually, presidents either stay low or stay where they are or drop further.
Sabato says Biden is benefiting from Congress passing landmark legislation and gas prices falling. Roger Federer is hanging up his racket. The 20-time Grand Slam winner announced his retirement this morning on Twitter.
I am 41 years old. I've played more than 1,500 matches over 24 years. Tennis has treated me more generously than I ever would have dreamt, and now I must recognize when it is time to end my competitive career.
Federer says he'll play more tennis in the future, but next week's Laver Cup in London will be his last competitive tournament. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. Nancy Lyons with an update on world and national news there in our 99.1 newsroom in Washington, D.C. Wanted to bring to you a story by our Alex Tanzi. It's on the Bloomberg terminal, and it talks about the housing downturn and what cities in particular around the United States are most at risk.
This is really interesting.
Isn't it crazy that we're
because
talking downturn?
Yeah.
Because we know what prices have been so elevated.
Right, but mortgage rates hitting above 6% today. So let's talk a little bit about this and dig into it, Carol. Homes in and around New York City and Chicago are most vulnerable to price declines in a potential economic downturn. This according to a report released Thursday by the real estate data analytics firm ATTOM. That's ATTOM.
Of the 50 counties most at risk, 9 are in and around New York City, 6 are in the Chicago metro area, 13 are spread through California. These counties have high levels of unaffordable housing, underwater mortgages.
Wow.
I know. We haven't heard that in a long time.
Yeah.
Foreclosures and unemployment. In contrast, counties least at risk, concentrated in the South and Midwest, apart from Chicago, have lower such levels. When you hear that, though, underwater mortgages, right, I do think of the housing crisis.
So let's get specific about these markets that are highlighted in this report from ATTOM. So in the New York, Newark, New Jersey, and Jersey City areas, Passaic County, Essex County as well. We also have Atlantic City on the list. In addition, Sussex County, and then also Union County as well. Those are all in the New York, New Jersey areas.
Yeah,
You don't have any Connecticut on here, which is interesting.
But you remember the story on the Bloomberg in the last week or two that was about people who moved to Connecticut during the pandemic are staying there?
According to the governor.
According to the governor.
Yeah.
Right, but there's got to be some stats that he's looking at.
Yeah, he is. In school enrollment's a big one.
I know people who've moved out, and they're not necessarily. I don't know. I don't
We'll
know
see
how
what happens when people have to come back to work.
Yeah.
And if they're okay with the longer commutes for 3 days a week.
Yeah, exactly. Well, I mean, these are areas where we've seen a lot of elevated prices, and as you say, higher mortgage rates, maybe concerns about the economic outlook, lots of things going on, but we'll see how this all plays out. All right, you are listening to Bloomberg Business Week. Carol Masser, Tim Stanovic. We've got stocks hovering near their lows. Countdown to the close coming up.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Slight bounce off the bottom, emphasis on slight. The Dow, the S&P, NASDAQ, all lower. 13 minutes to go ahead of the closing bell. The curve inversion deepening. Let us begin with the 2-year. Right now, 3.86%. The 10-year, 3.45%. The Dow, the S&P, NASDAQ, all in the red as we head toward the closing bell. Keep an eye on the 3,900 level. Right now, 38.98 on the S&P 500 index. Going to be very interesting to see how and when things shake out as the market closes. We've got the Dow down 193 right now, down 0.6%. Again, the S&P down by 1.2%, lower by 46 points. NASDAQ down 1.5%. That 2-year worth repeating, 3.86%. Spot gold down 2.1%, 16.62 the ounce, while West Texas Intermediate crude down 3.6%, 85.31 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. A modern currency must meet the needs of a modern economy. Yet, in an important way, the U.S. dollar is in danger of falling behind. In recent decades, countries from the UK to China have introduced payment systems enabling people to transact instantly, directly from their bank accounts at extremely low cost. The transition to real-time payments has already boosted global economic output by tens of billions of dollars a year. But in the U.S., fewer than 1% of all transactions settle in real time. To its credit, the Federal Reserve is trying to address at least part of the problem, but more needs to be done. The next iteration of money has the potential to benefit billions. The U.S. should not let itself get left behind. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, coming up on less than 10 minutes away from that closing bell. Charlie, of course, breaking down the numbers. We are just coming off our lows of this session, as you mentioned, but still, technology names taking the biggest hit on a percentage basis. Tim, just down about 1.3%.
Yeah, I'm glad you brought that up. Microsoft is actually really weighing on the S&P 500 and NASDAQ 100 today. It's down at levels last seen in the middle of June, which, by the way, I did. And by the way, middle of June was the lows of this market. So
yeah,
you got to wonder if we're headed back that way. Let's get into it with Roger Mortimer, portfolio manager at Crane Shares, joining us on the phone from San Francisco. Roger, how are you?
I'm great. Thanks very much, Tim and Carol.
Hey, it's good to have you with us. Normally on a day like today where you see the NASDAQ down 1.4% and the S&P 500 down a full percentage point, it's kind of like, the volatility that we've been seeing, it's kind of like par for the course now. Days like this aren't out of the ordinary.
It does seem that way, for sure, yeah.
What's going on?
Well, I tell you what, our thesis is an area which we think is very attractive for investors to focus on at a time when markets are volatile and things are changing. Energy transition and climate is a huge growth area at a time when growth is very difficult to find. And so we think that this is a place where investors should be paying some attention.
How specifically?
Well, here's an analogy for for life on Earth. We're sitting in the car in the garage with the door shut and the engine running, and that's unsustainable. 80% of the energy that we use on Earth is fossil fuels, and scientists and policymakers now agree that this is not something that we can continue to do. And so governments are pushing this idea of energy transition and pushing it hard all around the world. And they really have three reasons to do that. They believe in energy transition because they have signed net zero treaties. More than 70 countries around the world have signed climate objectives of net zero. But energy transition also addresses this idea of energy security, which, of course, is incredibly important in Europe at the moment, where if you don't provide the energy that runs your economy, you really don't have control of your economy. And finally, as we saw with the climate bill here in the United States, the Inflation Reduction Act, is that energy transition activity can create a huge amount of economic value. So governments really are lined up to drive the energy transition, and that is a long-term policy commitment. That is structural desire for spending, and that's quite different than sort of the drivers for many stocks, which would be what's the Fed going to do next week? What do earnings look like? This is a long runway of growth.
Well, how long-term and how patient do investors have to be? Because as Carol has talked about for months, as we've learned from what's happening in Ukraine and what's happening in Europe with gas supplies being shut off from Russia and the price just exploding, essentially, this transition is not coming in a very short time, and we're a lot less far along in the transition than I think a lot of people thought we were, i.e. we're still reliant on those fossil fuels.
Yeah, so I would turn that around and say the need is more acute than ever, and people are starting to realize that, right? That energy costs are a huge source of inflation. It takes a long time to build new infrastructure, and high energy costs feed into food costs, which drive inflation there. And these are not transitory factors. We're going to be in an inflationary environment for some time.
Roger, do you kind of cringe when, and forgive me, playing a little bit of devil's advocate here, but whether it's the U.S. officials, the president or his team say, we're going to release reserves or whatever to bring down, oil prices and gasoline prices or whatever, if you will, so that it's not so much pressure on individuals here in the United States. And yet that kind of goes against the climate initiatives, because you almost, in order to facilitate change, there needs to be some pain with the way we're trying to get away from. Is that not fair?
Yeah, Carol, it's a good question, but the problem is so much bigger than the release of strategic reserves in oil, right?
No,
We use energy everywhere in our world, and essentially we have to change the way that we do that across multiple industries. And essentially what we are going to try to do as a society is electrify everything and generate that electricity with renewable power. And that creates huge runway for companies that are in business related to either generating renewable power, tying it into the grid, storing it perhaps as either in a battery or hydrogen form, and in the electrification of all of these end technologies. And this is a multi-decade theme.
But do we have multi-decade? I mean, I think about this, and I'm looking at what's going on with the climate, and I'm just thinking, how much time do we realistically have before? I mean, it's already pretty severe in certain parts of the world.
You're preaching to the converted. Here's what I think happens. As the rate of climate change accelerates, people become more aware. They put more pressure on policymakers. We invest in companies that look dirty today but are transitioning to clean business models. And as they transition, their valuation increases. There's a valuation arbitrage. And we think that as investors see that this is occurring, they will start pushing other companies to do this. And this is what's really interesting is the social and financial objectives are aligned today. Clean power generators trade at multiples of what dirty power generators do. And so if you're a company like RWE in Germany or AES in the United States, you're emphasizing to your shareholders that you are growing rapidly with renewables, and that renewables as a share of your total is becoming larger and larger. And the pool of investors who want green companies is bigger than those who want what you used to be, so the valuation expands.
All right, just in the last 90 seconds that we have with you, Roger, talk some names here and who you think are the right companies to be bullish on.
So this is a global fund, and Tim, you have to pursue a strategy of investing in energy transition, you have to go to where the government policy is most aggressive in forcing the change, because that's where the companies are reacting the fastest. So we have a big position in RWE, a German utility that today looks like a coal-fired utility. It's the sort of investment that nobody wants to make, but it is rapidly transforming itself into a renewable utility and trades at less than a quarter of the valuation that the companies that look like that trade at. We own Reliance Industries. It's one of India's largest companies, and India is a net energy importer, It requires U.S. dollars to do that. That's very difficult. Reliance is the de facto implementation vehicle for India to meet its own renewable needs, and it's building out the whole value chain at a very, very rapid rate.
Yeah, they've been doing
here in the United States.
They've been doing a lot of work. No, go ahead. Just quickly, just got about 15 seconds.
Say in the United States, a company like AES, right? NextEra is already clean, trades at a very high valuation.
Yep.
AES is managing that transition between dirty and clean, and it's being revalued as it makes that.
Hey, listen, great to check in with you, especially we've got Climate Week coming up over the next week or so, and certainly we'll be talking about it a lot. Roger Mortimer, good to check in with you again, portfolio manager at Crane Shares on the phone from San Francisco. All right, right now it's time to head over to our TV colleagues for Beyond the Bell, counting you down on radio, TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar and Tim Stenovic. We welcome them and we welcome our audiences across Bloomberg Television, radio, and YouTube. Another wild day here, Carol. Yeah. We're off the lows of the day, but still significantly in the red.
Yeah, which makes me wonder, Romaine, and it's something, Caroline, you brought up yesterday about the volatility index, the VIX. Why isn't it higher amid all of this volatility? We're just looking it up, just a hair at 26.45, but well off of what some people say need to kind of hit 40 on a consistent basis, Tim, to really show that maybe we're seeing some changes in the market longer term.
Yeah, it makes me also wonder if we're going to retest the lows that we saw back in June. I look at a company like Microsoft that, fell 5.5% on Tuesday, falling again today, dragging down the NASDAQ 100, dragging down the S&P 500, and it's trading at levels last seen back in June.
Why do we need to retest those lows? I keep hearing people say that.
I don't know. I mean, I don't know if Taylor, you put on your technical analyst hat with your CFA.
Well, the only technical analyst I've heard from this week is Katie Stockton. She kills it every time, and I think it was her who said that this actually, Caroline, would be a positive because we saw those June 14 lows as a positive signal that we sort of found that bottoming out. So being able to test those would be another positive signal that we're not going below that. So that level around 36, 37-ish certainly would be the number, though I'm hearing other calls for maybe even just 39, which takes us to nothing.
Right, but then what was it back in February when we were like at 4,300? Some people thought that was the bottom, and then again back in March when we were at 4,000, they said, well, that was the bottom. And how swift did we go back in June down to that 36, 66 level?
Yeah. A lot. I'm not the technical analyst.
Yeah, I mean, I'm not arguing with you. I'm just, arguing with you. All right, we're getting the closing bells here in New York on this Thursday afternoon. A down day, 0.5% or so on the Dow Jones Industrial Average as we wait for these numbers to settle. The S&P 500 lower by about 44, 45 points, 1.1%. 39.01 looks like it's going to be the level it settles at. So basically, that is actually your first level of support on the pivot graph. 39.01. We'll see if that holds in the morning. The NASDAQ Composite down 1.4%, and the Russell 2000 guy is going to finish the day by 0.7% in the hole.
And remain even a more negative tone if you dig a little bit deeper into, let's say, the S&P 500, where most of the names, 358 to be exact, to the downside, 142 actually holding on to some gains today, 3 unchanged, but more to the downside, Taylor.
Yeah, Carol, you see a little bit of a lot of that downside, right? For the radio audience, we break out the sector best performers, the sector worst performers, and there's a lot of red even in the best performers. There's only actually 4 sort of subsectors that are still in the green on the day. It's banks, it's a lot of this hardware equipment, auto, and then pharmacy. So really that's not telling us a lot. Banks, though, maybe the clear outperformer today. You're up about 1.5% on sort of that higher yield narrative. Carol, everything else, though, really red on the screen. Take a look at the bottom here. Even with the, quote, worst performers, you're looking at software and services, technology, semiconductors, and then, of course, energy is in there as well. You're off almost 3% or so.
All right, so which made me a little nervous that my gainers weren't going to hold on to their gains, but phew, luckily they did, including Netflix with their shares closing up about 5% here, and we're seeing that being the best session since August 10th. So certainly some positive tone when it comes to shares of Netflix. Top of the S&P 500, top of the NASDAQ 100. Why? Well, we did have Evercore ISI analyst Mark Mahaney come out upgrading his view specifically on that company, and it's really the latest sign that Wall Street is growing more optimistic about the potential advertising, I should say, on the service. Keep in mind, though, Netflix shares still down about 60% so far this year. Humana, also an outperformer, up 8.4%. managed care companies overall up. This as Humana set a target of $37 for adjusted earnings per share in 2025. So we're talking about a targeted 14% annual compounded growth. It expects to increase earnings at least as quickly in the years beyond. So some outlook there, top in the S&P 500 on that one. One more for you, Wynn Resorts up about 7.5% here, top in the S&P 500. Credit Suisse out there reinstating their coverage on the casino operator with an outperform rating. They had been rated neutral before moving to restricted back in May of 2021, according to our data. And they talked about Macau, Vegas trends, and they also talked about a compelling stock valuation for reasons for that call, Tim.
All right, well, we got a lot of interesting stories about why stocks moved lower today. Let's start with Microsoft, finishing the day down by 2.7%. It was the biggest drag on the S&P 500, along with Apple and Adobe. We'll get to Adobe in just a minute. It did fall 5.5% on Tuesday, now trading at levels last seen back in June. Adobe finishing the day down by close to 17% today. It's the worst drop since 2010. You have to go all the way back to 2010 to find a single-day drop like this. This all because of its $20 billion in cash and stock acquisition for Figma. It's interesting. Some analysts and investors clearly think that Adobe overpaid for this. Look at what Oppenheimer said, that Adobe overpaid. Here's why Microsoft also might be lower today. BMO Capital Markets said it's expensive but defensive. It keeps it out of the hands of Microsoft.
Yeah, it's something to keep an eye on. I just want to point out real quickly, we've been talking a lot today with folks here about the potential for that return of cash to investors and whether that would continue in a down market. Now hearing from Texas Instruments saying that it plans to actually boost its dividend and authorizing added $15 billion worth of buybacks here. So Texas Instruments going to boost that dividend, Caroline, and add $15 billion worth of buybacks to that program.
Still got some confidence coming from certain corporates, a desire to satisfy their investor base. At this moment, we have companies that are worried about a US dollar. Texas Instruments, that maybe is an exporter outside of the US, might be worried about the strength of the currency. At the moment, we did see, once again, King dollar back on top. The Canadian dollar, of course, the loonie, as its friendly term is, we're off about, well, weakening 0.5%. That as we see oil drop down to the, of course, significantly today. We see the British pound weakening by 0.6%. The Norwegian krone also weakening. Why? Because of the commodities trade. WTI crude off by 3.7%. Brent crude off by 3% as well. Maybe the US won't be building up its emergency reserves as quickly as had been anticipated, and indeed we're still worried about a slowing global growth story. Natural gas really plummeting, maybe on the good news that we managed to prevent that freight, that rail strike that we were so worried about. Natural gas dials back by more than 8%, and we're looking at sovereign bonds that once again were not a haven of choice on the day. In Japan we sell off, in Norway we sell off, in Europe, across the board. Taylor.
I mean, definitely across the board and really within full faith and credit again today. Another sort of 3 straight days of yields in this relentless climb higher that we've been talking really all day about. I point out once again, another 7 basis points here on a 2-year yield just in the last 3 days, really migrating north from the lows of 350 up closer to 4.
I think if you talk about that conviction or the lack of conviction in this market, you are seeing conviction right now in the bond market. When you look at what we're seeing on the short end of the curve, 30-something basis points just this week alone. You add that to the 17. And then when you look at that inversion, and I know, Carol, you're big into the inversions here. When you look into those inversions
Glad you know that.
what is it? Thank you. What is that telling you? What is that telling you? Are you still glass half full?
Well, Carol, just quickly, when you think about when we had always asked what are peak yields, people always said maybe on the long end, but we're not peak yields on the front end. If you believe this Federal Reserve and looking at a Fed funds rate that eventually has to get to what that 2 year is telling you.
I mean, it's hard when you continue to see strength in the labor market, right? How important that is to keeping people out there spending. We've got some retail sales data, of course, today. But I mean, I do think about if that starts to come undone, maybe then the glass isn't half full. But at this point, we haven't seen that, at least not yet.
Yeah, I mean, I think that's why the conversation has shifted, not necessarily from 75 to 100 basis points at next week's Fed meeting, but how much more does the Fed have to hike to find that terminal rate and in order to bring inflation down? Because, you know, we are seeing weakening in other parts, but inflation is still really persistent, and that's sort of the takeaway from the last few days of data that we've gotten.
And that's why we were hearing from Jeff Kleintob over at Charles Schwab that tomorrow's data is going to be important. The University of Michigan sentiment, the fact that we are going to get some read, is an improvement. We know that because gas prices have been pulling back. But what are the future viewpoints on inflation? The 5 to 10 year, we're expecting, what, 2.9%? That is actually relatively close to a 2% level, but still not at it. In 5 to 10 years, in the nearer term, 4.6% is where the market sees it, or indeed the individual.
What do you guys make of the idea? I mean, we heard from Gunlack, who was it, Kathy Wood, and of course, Sir Elon Musk, the idea that the Fed
Stop
should maybe
knighting him.
just go 25 basis points and then pause and see what happens.
Look, I think with Kathy Wood and with Elon Musk, you have to remember that they hold a lot of, equity in companies that would benefit from low interest rates.
They're not talking that book.
Tesla wants to see low interest rates. ARK Invest wants to see interest rates lower.
Right. But there was an argument there, and I think Gunlack sort of articulated this a little bit better than what Musk and Wood did. The idea that the lagged effect of these rate hikes, we haven't really seen that effect yet, and that is there a sort of an argument to be made for a pause or at least a slowdown in the pace or the severity of those hikes?
I'd go back to what Danny Blanchflower said earlier on surveillance. I mean, this is his concern. Well, he's concerned that the Fed's overdoing it when it comes to interest rate increases, and he thinks, again, that this is going to start impacting the labor market at some point significantly, and that's going to be more problematic for economic growth.
Have you been watching surveillance all this week? They don't have little desks or anything there. And John Farrow's just like man-spreading like all around. I mean, Tom Key's not even on camera anymore.
And I listen, I do multitasking. Yeah,
They're
exactly.
in London, by the way.
They're mourning, Romaine.
There's a lot going on over there.
Tough crowd, man. All right, we got to run, guys. That's going to do it for our Thursday edition.
Great to see you again, Carol. 2 days in a row.
Nice facial, by the way, Romaine.
Thank you.
All right, we will see you again, same time tomorrow for Beyond the Bell.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, one thing I do want to mention, we talked about those headlines from Texas Instruments, boosting dividend, authorizing an additional $15 billion in buybacks, which I think is interesting. The company, as of second quarter 2022, the company's reduced its outstanding shares by 47% through its share repurchases since the end of 2004, so over a long time period. Shares of Texas Instruments, Tim, in the after hours, unchanged, which says to me, typically when you see a buyback, the stock, I think, like, this is the best use of your money. This is what you're going to do. I think this is not impressive to investors.
Yeah, it's really surprising to see that, especially in recent months when we have seen such a reaction from investors when companies have used their cash to buy back shares to try to support, or also, a signal that they're seeing value in them.
And maybe they're worried that, well, the earnings aren't going to be there, because you know what it does. It reduces the shares outstanding. It should improve the EPS number, but maybe investors are worried about that E number, earnings part of the number. All right, let's get to world and national news. Back over to Nancy Lyons. She is in D.C. Hey, Nance.
Thanks, Carol. President Biden is hailing the tentative agreement that railroads and unions have reached to avert a work stoppage that threatened the U.S. economy. He spoke earlier in the White House Rose Garden.
As you might guess, I am very pleased to announce a tentative labor agreement that has been reached between the railroad workers and the railway companies. This agreement is a big win for America and for both, in my view.
Biden says workers receive a pay boost of 24% over 5 years and new medical leave policies, and he says the companies will benefit by being able to retain and recruit workers. President Biden's approval ratings have been improving from his lowest point this past summer, but some are still concerned about his handling of the economy.
Support for Biden recovered from a low of 36% in July to 45%, driven in large part by a rebound in support from Democrats just 2 months before the November midterms. The Associated Press Nork Center for Public Affairs research poll found the outlook is better after a string of legislative successes, but President Biden's approval rating remains underwater in large part because of the economy. Still, the poll suggests Biden and his fellow Democrats are gaining momentum. In Washington, I'm Amy Morris, Bloomberg Radio.
Adderall, the widely used drug for attention deficit hyperactivity disorder, is experiencing shortages across the U.S. That's according to interviews with patients as well as major pharmacy chains that carry the pills. In some cases, patients have been told they may have to wait more than a week to receive their medication. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic. We are live on YouTube right now, also in our Bloomberg Interactive Broker studio. I got to say, on my way walking out of the house this morning, my husband's like, hey, did you see this story?
Yeah, this is pretty wild. So the White House slammed Republican governors' efforts to bus migrants to Washington, D.C., and other Democratic enclaves without any advance notice, calling their actions cruel and shameful. The story specifically that you're talking about is the 2 plane loads of migrants that Governor Ron DeSantis sent to Martha's Vineyard. They landed yesterday. The Vineyard, of course, is an island off of the Massachusetts coast, best known as a Tony Haven for presidents and wealthy vacationers. Also a very Democratic place, you could say.
Yeah,
Lots
I
of
think
Democrats.
I think it's safe to say a lot of I guess you could say that they are now receiving shelter and some aid after landing on Martha's Vineyard, and so it's very interesting. This migrant group included children. They did arrive on 2 planes around 3 p.m. without any warning, and yeah, a lot of folks are calling it a stunt.
Well, it's not just these 2 planes, though. Republican governors in border states have been sending thousands of people north, more than 10,000 from Texas alone, to Democratic-led cities, including New York, Washington, and Chicago, saying that they should help handle the results of President Joe Biden's immigration policies. In a tweet, Governor Abbott of Texas said the decision to send people to D.C. was meant to force the Biden administration to secure the border. He said this morning, 2 Texas buses of migrants arrived at the Naval Observatory in D.C. Vice President Harris claims our border is secure and denies the crisis.
I think it's also safe to say that people on both sides of the political aisle say things need to be done when it comes to immigration policy. And figuring out this has been a country that has often welcomed immigrants, but many would say that it needs to be processed legally and bring people into the system. But it just shows, are midterms coming up? Maybe.
Yeah, that's a really good point.
Immigration policy, I feel like, is always a hot button.
But at a time when there's 2 jobs for every 1 person who's unemployed, we could use more people who want to work in this country.
Many would argue, too. Let them come in, make them part of the system, and yeah.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of Texas Instruments higher after hours, up now by about 1.6%. TI has authorized $15 billion in share repurchases. It is boosting its quarterly dividend by 8% to $1.24 a share, rewarding investors after a difficult year for chip stocks. It was a difficult day on Wall Street, difficult day for the bulls, with the S&P ending the day at 3901. A level just about 3,900, a level that has become a battle line for the bulls and bears in recent months. S&P today down 44, decline of 1.1%. Dow Industrials slumped 173, lower by 0.6%. And NASDAQ was down 167 points, a drop there of 1.4%. The NASDAQ 100 index, full of tech names, down 1.7%. The two-year yield, 3.85%. Curve inversion deepening. We've got the 10-year 3.44%. Spot gold today down $32 the ounce, down 1.9%, $16.65 on gold, while West Texas Intermediate crude was down 3.8%, $85.07 a barrel. So again, recapping, S&P closes just above 3,900, down today by 1.1%. The two-year yield 3.85%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, one of the well-known folks in the private equity space is John Gray, no doubt about it. He's President and Chief Operating Officer over at Blackstone Group. And while we often talk to him about the market environment and alt investment space, recently our Bloomberg News Wealth Team reporter Amanda Gordon caught up with him about another investment he made in the efforts to treat cancer. Amanda's with us in our Bloomberg Interactive Broker Studio. And I should say it's John along with his wife. Good to have you here. Great story. Just went out a little while ago on the Bloomberg and out on social. So tell us about what's going on.
Well, John and Mindy met at Penn and went there for their 30th reunion this year. But 10 years ago, they started a center to raise awareness about the BRCA gene, which creates risk for cancer, ovarian, breast cancer, prostate cancer. And now they're in this next phase, having seen the progress and awareness raised of actually using science to do early detection so that you can catch the cancer before it even forms.
What's this very personal story with this donation? Take us through what that was and how it affected the family.
So Mindy's sister, Faith, died at the age of 44 and had a BRCA gene mutation that caused her ovarian cancer. And that created this sort of double whammy for everyone in her family of having to deal with that loss and heartache. And also the fact that members of her family and next generations could be carriers and could be at risk. So what started as a very personal thing, and at the beginning, actually, they were not that interested in being so public about their efforts, but they have seen that it's become more of a community thing because they engage their friends, and they've helped people through that crisis. And now they're really excited about the idea that young women who learn that they have this gene mutation might have an alternative to removing their ovaries, something much less invasive.
Which really changed is the outcome potentially for so many. Lucky for us, we have a portion of your conversation with John Gray where he talks about this investment and how he thinks about it. Let's play that for everybody.
On the science front, the pandemic in some ways I think has encouraged people about the power of science and what can be done. And then on the low income front, I think there are just many people who are obviously suffering coming out of this. And so what we've tried to do is say, how can we move faster? How can we have more impact at scale? And that's what we like to do. And you hit on it, Amanda. It's definitely not a passive form of philanthropy. We like to be engaged. It reminds me a little bit of our private equity world, right? You buy a business, you want to have an outstanding management team, you give them the capital to grow the business, and then you're meeting with them talking about what are the strategic areas of focus, how can we get there.
And that, of course, it was the voice of John Gray, President and Chief Operating Officer of Blackstone Group, talking with our own Amanda Gordon, who is Bloomberg News Wealth Team reporter, and she's here in studio with Tim and myself. It is interesting, I feel like, the evolution of philanthropy, where it used to be, I feel like a lot of people, wealthy people, would just give away money and kind of do what you want. But you listen to John, I mean, it's obviously a personal story, but very actively involved.
I also admire the sort of the stick-with-itness and the long-term commitment. As I said, they met at Penn. They started this in their 40s. Now they're in their 50s, and they view it as a lifetime project that they will continue to be supportive there. Obviously, they have loyalty and a comfort level with Penn, but they also support low-income students in New York. So they do keep focused, and I think we can expect a lot of interesting things. For me, it was a gray day, but it was a sunny day because there's just reason for optimism when there are people around like this making that commitment.
As you write, according to the Bloomberg Billionaires Index, John Gray's worth $5.4 billion. Where else do you expect him to? It's funny you say dry powder when you're talking private equity, and we're going to be talking with David Rubenstein in just a few minutes. But you could say that he's got a lot of dry powder for philanthropy too here. Given what you know about what he's done and what he and his family hold important, where else do you think he'll spend his money?
Well, I know that he talked about, through Blackstone, being exposed to the life sciences, which is an area that they've moved into, and he had just been at an event in Cambridge to see, more lab space being created, and that, science as a field is I think, an area of interest to him, business-wise and philanthropy. I think that the Grays are very clear and focused in these two areas to help low-income kids in New York and to help create the science and the innovation that will improve people's lives. So I really see them in this age of distractions and sort of peanut butter philanthropy even. It seems like these are their pillars, and given their track record so far, I think they will really be constant in those themes.
Well, when you see this kind of amount of money, and you also see, as you said, the devotion over a tenure, a long period of time, this is how you bring about disruption, innovation, especially when it comes to the healthcare space, and I feel like changes in many of these diseases. So a really important move by them and a great story by you. So thank you. Bloomberg News Wealth Team reporter Amanda Gordon catching up with John Gray of Blackstone. Check it out on the Bloomberg Terminal. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, we have a great way that we're going to wrap up the last half hour of Bloomberg Business Week because we're going to be sitting down, chatting with David Rubenstein. He's got a new book out, How to Invest, Masters on the Craft, just culled from all of the conversations he has with so many well-known and successful investors.
Talk about timing the market with this book release.
Yeah, the timing is perfect.
Yeah, a lot of questions about how to invest right now. We're going to get to that in just a few minutes. First up, though, Charlie Pell, a lot of news happening in the after hours.
Indeed, and got to begin with a red headline on the Bloomberg Professional Service. FedEx says it is withdrawing its fiscal year 2023 earnings forecast. Right now, delivering losses after hours for FedEx. I'm looking at the stock GIP after hours, and it is down now by about 8.5%. So FedEx tumbling, certainly going to be a major factor heading into the next session. But again, FedEx withdrawing its fiscal year 2023 earnings forecast. Developing story got the headline. We'll have more details as they become available. Stocks moved lower today. Treasury yields climbed after the latest batch of economic data did little to dial back expectations for the Federal Reserve's next move. S&P extending declines to close at the lowest level since July 18th, ending just above 3,900, a level that has become a battle line for bulls and bears in recent months. 3,901 to be precise, with the S&P today down 44 points, down 1.1%. The Dow lower by 173 points, down 0.6%. NASDAQ today down 167, a drop there of 1.4%. The curve inversion deepened today. We have got the 2-year yield 3.85%, the 10-year yield 3.44%. Spot gold down 1.9%, down right now down $32 the ounce to $16.64, and West Texas Intermediate crude down 3.7%, 85.19 a barrel. Well, another worry for investors could be labor costs. Liz Ann Saunders at Charles Schwab sees that eating into company profits.
If you just do the simple historical math of where labor costs are relative to revenues, that suggests profit margins more in the 12 to 13% range versus the 15% or so that we saw in the last couple of quarters. So I think it's both a weaker profit story to come as well as a weaker margins story to come.
And to that point, FedEx again withdrawing its fiscal year 2023 earnings forecast. Developing story, that headline from the Bloomberg. Recapping, stocks lower today with the S&P down 44, a drop there of 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, earlier this week, U.S. stocks posted their biggest drop in 2 years. This was after the latest CPI report surprised to the upside. The silver lining, maybe it's a good time for savvy investors to buy the dip. At least that's what David Rubenstein told our Bloomberg TV colleagues the day after that massive sell-off. His comments got a lot of play online because who doesn't want investing tips from the best in the business? And luckily for us, he's back with some more tips.
David Rubenstein is founder and co-executive chairman of Carlyle Group. He's also the host of Bloomberg Wealth on Bloomberg Television. He joins us via Zoom from Washington, D.C. David, good to have you back with us this afternoon. How are you?
I'm doing fine. Thank you for having me.
Yeah, thanks so much for joining us. I want to start with the markets because I think a lot of people are spooked right now. Just give us your interpretation of what you're seeing when you look at the equity markets right now.
Clearly, the markets are not happy with the higher inflation numbers, and I think that's a big factor. When you have higher inflation, you're going to expect higher interest rates, and the Fed is next week likely to increase interest rates by 75 basis points. There are some who think it could be 100 basis points, but I doubt that would happen. That would probably really hurt the markets much more because that would show the Fed is much more nervous about inflation than it has said it is, although it has said it's worried. But I think 100 basis points would be much more than their guidance has been. So if they were to do 100 basis points, the market would really sell off, in my view. 75 basis points, the market's already assuming that's going to happen. So probably not a big surprise in the markets. I think the news from FedEx that you were just talking about probably is going to scare people early tomorrow, because when FedEx is canceling its guidance, that might mean that other companies are going to follow suit, and that might mean earnings are going to be less than people expect. So I think markets are going to be choppy for a while. There's no doubt about it.
Well, and FedEx shares right now down about 11%. Choppy, but you still think there are opportunities, especially when we see the equity side of the markets, David, sell off, that is a time to enter. You stand by that.
The greatest fortunes in the stock market are generally not made when people see a top of the market and they say, now I'm going to get in.
Fair enough.
Markets are down, and then what happens is people say, well, I think it could go down further, and they try to look for the bottom of the market. Anybody that's looking for the top of the market or the bottom of the market generally is on a fool's errand. So shares are off now, more than 20% from the peak. And that's a pretty good downside. It could go down a little bit more, but I don't see another 20% down. I think the markets are pretty much near the bottom. They might be 5% more to go, or maybe a little bit more. But I think we know a lot of what's going on in the markets now, and not likely to see big changes. Now, the Ukraine-Russia situation has had some positive news. Maybe that war could be over sooner than we once thought. And I think now, generally, the inflation situation not under control, but the Fed seems to be on top of the situation, maybe more than it was before. So I'm not expecting we're going to see another 20% decline in stock prices.
David, and I want to get into your book in just a moment, but would you concede that it's safe to say that we really don't know kind of how things go on the other side of it, considering the pandemic that we're coming out of, the amount of stimulus that was pumped in to the global economy, that we still don't quite know, and there's still the same risks, right? We could get another variant that sets things back. China's still struggling. Geopolitical, as you said, some good news out of Ukraine, but it's still a little bit up in the air. Is it safe to say we don't quite really know how this all plays out?
This is what lawyers often call a case of first impression, which is to say we have something that's relatively unique in the sense that we haven't had $5 trillion injected into an economy quite the way the federal government did, and then know what the impact is going to be on inflation in the markets a year or two later. So we had this gigantic injection in to prevent a recession during COVID. We did prevent the recession, but we also gave us a lot of inflation. If you go back at any time in market history, you'll always find that there are problems. There's never a case where people say, everything's looking great, and it actually turns out to be great. It's rarely the case that you don't have challenges. Right now, we have the challenges you just discussed, plus, the challenges of getting people back to work, the challenges of avoiding another COVID-type pandemic, the challenge of the U.S.-China relationship, the challenge of the Russian situation, the energy situation, many challenges, but that's what makes great investors great. They can see through the challenges and get in when the going is good, and other people think it's bad. But now it's probably not a bad time to begin investing.
Hey, David, is there any concern? Do you have any concern that the Fed could overdo it because monetary policy, it takes a while to take effect in the economy? We're still getting some pretty hot numbers when it comes to jobs, and inflation's still high, of course. But are you concerned that the Fed just goes too hard when it comes to interest rates?
Well, of course, the Fed did make a mistake that it admitted. It thought inflation was going to be transitory. It obviously was not. Jay Powell, who used to work at my firm, and I've known him for a long time, though I'm obviously not getting inside information from him now, I think he's a very cautious person. He likes to tell you what he's going to do, and he likes to then do it. He's pretty much said, the FOMC is going to go up by 75 basis points. I think if they were going to go 100 basis points or more, I think they would have tipped the markets a bit because, as I said earlier, 100 basis points or more now would shock the markets. And I think it would be something that would see a big sell-off in stocks. So I don't see that being tipped from the Fed. And obviously, he doesn't control what the FOMC does, but he has an enormous amount of influence. So I suspect will be something around 75 basis points. The real change is whether we will have another 50 basis points increase for the remainder of the year, which is what the markets have assumed, or could it be the case that we get more than 50 basis points over the remainder of the year? And then, of course, right now the markets are generally assuming probably not any real increases early next year, and who knows, that could change. But right now, I think the markets really want some good inflation numbers. The next time some inflation numbers come out, hopefully they're better than the ones we just saw.
Do you find it, okay, and we promised we're going to get to your book, but is it wacky that we have such a strong labor market, and yet, David, that we constantly talk about
let me
recession.
Talk about the labor market.
Okay.
The unemployment rate is a misleading number in many respects. It's the one we all know. And right now, the number is, I think, 3.7%. It went as low as 3.5%. And that's as low as anything I can recall. But that doesn't take into account how many people are looking for jobs. The amount of people in the labor force is less than it used to be. And remember, unemployment rate is the number of people in the previous month who are in the labor force and looking for jobs and can't find them. The labor force is actually smaller than it would be ideal. And so there probably are, more people who would like jobs but don't think they can find them at the salary they want or the kind of work style they want. So I think it is hard to believe that the unemployment rate is so low when, I do know people that are still looking for jobs. And I think that, we should recognize that generally an adult population, you have about 66% of working population in adult population who are in the workforce. Now that number is probably closer to 62 or 63%. So we have more people who could work, but they've taken themselves out of the workforce, and that's why the unemployment rate is so low.
All right, so let's talk about the book, How to Invest, Masters on the Craft. And I do wonder, David, generally, successful investors, I would argue, that are successful, it's because of their differences. They find opportunities where others do not. So at the same time, I wonder, is there something that successful investors all have in common?
Yes, they have these things in common. They tend to come from blue-collar and middle-class families. They don't come from very wealthy families. They tend to be pretty good students. These are not typically college dropouts or high school dropouts, as a general rule of thumb. They tend to be pretty good in math. They tend to like to make decisions. They tend not like to delegate. They tend to be people who will defy conventional wisdom. The conventional wisdom say now is not the time to invest. That's when they invest. They also tend to be relatively humble because they've made a lot of mistakes over the years. Every investor does. They also tend to get rid of their mistakes pretty quickly. A really good investor, when he or she makes a mistake, they don't labor over it for months and months and months and stew about it. They get out of the position and they go on to the next thing. They also tend to be, I'd say, relatively philanthropic. Clearly, if you're in the business world and you're an investor, as opposed to being in the endowment world or a nonprofit world, you tend to make a lot of money as investors, and they tend to give away a large percentage of it. So generally, these are people who are quite articulate, quite smart, and quite hardworking. Hard work is not a problem for them because what they do is what they love. Investing is not for them work, it's pleasure. And once they've made whatever they need to make, $1 billion, $2 billion, $10 billion, $20 billion, they don't stop working. They work until they, just can't do it anymore. They don't tend to retire at 55 or 60.
Some of the names on here, I mean, this is a who's who of the Wall Street world and also Silicon Valley when it comes to alternatives. I mean, we're talking people like Larry Fink, John Gray, Sam Zell are featured in here, Ray Dalio when it comes to hedge funds. We got John Paulson on hedge funds, Mark Andreessen when it comes to venture capital. I want to go back to what you said about mistakes, though, because I think this is something that doesn't get enough attention, because a lot of people look at these folks as people who've just been so successful, and the mistakes aren't really what's written about. What are some prominent mistakes that you learned about when you were doing reporting for this book?
Well, of course, every investor has his or her stories of their mistakes, and I wouldn't put myself in the great investor category, but I turned down Facebook when Mark Zuckerberg was in college. I told Jeff Bezos his company wasn't going to get anywhere, and I sold his stock relatively early, right at the IPO. When Mark Andreessen came to my firm to try to raise money at the beginning for Netscape, I told him it would never get anywhere. So I, made a lot of mistakes myself. I think every investor makes mistakes, and that's what life is all about. So every one of these investors will tell you about one mistake they've made or another, and I could go through each of those investors and tell some of the mistakes that they told me they make. But, in the end, they get over it quickly. I tend to be a person that likes to talk about my mistakes 30 years later. They don't do that. They tend to go on to the next thing, and that's one of the reasons they're great investors. They can clear their mind of their mistakes.
Well, one thing I found among the investors that you talk to, I always think about Sam Zell a lot in terms of when he sold his REIT at the height and just before everything came undone from the great financial crisis and the housing meltdown. And I do wonder, is there a lesson there in terms of who were, was he just super smart, lucky timing? Like, what is it?
Really smart people tend to have better luck than people who are not so smart.
Yeah.
So in Sam Zell's case, he's really smart. He wasn't really looking to sell his company. He got an offer, and then he was willing to accept that offer, and then another offer came at a higher price. He kind of ran an auction, and he wasn't intending to. But it shows you he makes mistakes too, because he got a higher price than he ever expected, and a higher price than he would have had he not run a little auction. The profits that are above the price he originally accepted was a large sum of money he made. he took that money and bought the Chicago Tribune, and it went bankrupt. So he quickly learned that running a newspaper is not as easy as running an office building.
I'm trying to think of, you know, the average investor out there, people who are listening to our show, people who have Bloomberg terminals, who are, you know, making their own personal investments, and even beyond those people, David. And I'm wondering what lessons they can take away from listening to the pros.
The most common mistake that investors make, the pros would say, and I think I'm talking about average investors. In other words, the book is not designed to make you into Sam Zell or John Gray. That's unrealistic. No book is going to do that. But it's designed for people who are average investors who dabble in the market, or they buy funds and they have other people dabbling for them, in effect. I would say that the most common mistake that people point out to me is that people, when the markets are going up, they rush in and they want to catch it at the top. And then when the markets are going down, they want to sell. And even a brilliant person like Sir Isaac Newton, considered at the time the smartest man in the world, you know, the discoverer of gravity and a whole variety of other things, he invested in a South Sea Corporation publicly traded stock company, and he got out and made a big profit. And he said, you know, I'm smart in other things, not just physics. But then the market kept going up and up and up. He said, uh-oh, maybe I missed the top. He put all of his money and borrowed money to go back in, and the company went bankrupt. So he went bankrupt too. So here's a guy who's one of the smartest men in the world, but he got caught up in the temptation of seeing other people making money when he wasn't making it. So you got to be very careful, and I think know what you're doing. Also, one of the advantages of being a value investor and a long-term investor, as Warren Buffett is, they tend not to sell a lot. And when you sell a lot or you buy a lot, you have a lot of transaction costs and you have to pay taxes. One of the things that Warren Buffett has done in over 60 years, he's compounded at 20% a year for 60 years. Nobody's ever done that before, is he doesn't sell very many things, and therefore he doesn't have transaction costs, fees, but he also doesn't pay taxes in the sense that he's not having capital gains taxes because the stock's going up and he's not selling. And that's an important thing. People should hold on to things for quite a bit longer than they tend to.
Well, and I think that's an interesting thing to say. And here I am watching shares of, I want to go back to that headline of FedEx. It's down about 12% in the after hours after the company withdrew its fiscal year 2023 earnings forecast. And it's also taking down shares of UPS in the after hours, which are now down about 6%. I mean, things like this, David, you know, we try to glean so much from it of what it's telling us about the economy. We started off our conversation talking about this, but I mean, how do investors, you know, have to think about things when they're seeing maybe a position that they are going down 12, 13% here in the after hours? You know, how do you figure out, is this still something I hold on to, or is this something I sell?
Let me ask you this. If Warren Buffett was a shareholder in FedEx, I don't know if he is,
yeah,
do you think he's going to wake up tomorrow morning and sell that stock?
Nope. No.
And the answer is no, because he likes to buy great companies and stick with them through thick and thin. They generally, that'll work out, as he proved in a lot of companies. His biggest holding now is Apple, which he bought was much lower price than it is today. You don't know whether the FedEx removal of guidance is because there's some exogenous thing that's unique to FedEx, or it just reflects the fact that there's not much shipping going on because there's not much economic buying, and not many things are being bought and shipped and so forth. You just don't know until you see what the reason is for the withdrawing the guidance. That's a big drop, though, 12%. That's for sure a big drop. But I just don't know yet what the reason is.
And let me be fair to you and our audience. The CEO of FedEx saying global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and the U.S. We are swiftly addressing those headwinds, but given the speed at which conditions shifted, first quarter results are below our expectations. There's a little bit of color. How does that make you think about something like this? Yeah.
Well, they emphasize the word global, so maybe the global you know, maybe the economic problem is outside the United States more than in the United States. And there's no doubt that Europe is on the precipice of a recession because of the high energy prices, high inflation, high interest rates, and the whole war in Ukraine and the impact on the supply chain in Western Europe. So it could be that's part of the problem. And obviously, Chinese economy has slowed down, and that could be part of the problem as well. I'd be surprised if the problem is only because of the United States. I don't think that's probably the case. The U.S. economy it's chugging along okay. We're not in a recession. We may or may not go in one, but we're clearly not in one right now.
David, we're speaking with David Rubenstein, the founder and co-executive chairman of Carlyle Group. He's also the host of Bloomberg Wealth on Bloomberg Television, author of the brand new book, How to Invest, Masters on the Craft. David, the people you spoke with, really interesting names there. I want to go to Mike Novogratz.
Wait, can I just say, though, David, there's a lot of men. There's a lot of men.
Well, there's a lot of women, too. I would say, obviously, it's easy to do a book like that and fill it with old white men. I tried hard not to do that. I have in there, for example, Kim Liu, who is the woman that runs the endowment for Columbia University, a really impressive investor. Also is in there Paula Belen, who runs the endowment for Rockefeller University. Sandra Horvath, who's the most senior woman in the entire private equity world. She's at Carlyle. I would say what I tried to show is that there are women and minorities who are moving up into the pantheon of great investors. But let's be honest, today there are more white male people who are considered great investors than women, rightly or wrongly. That may change in time. And in part, what I wanted to do is inspire people who are not white males to go into this business and see that you can become Paula Belen or Kim Liu or African-American that's in there, John Rogers, who built the largest African-American investment firm in the country, Ariel Capital.
Right. We've talked with John, yeah.
Can I talk about crypto?
Yes, you can. Sorry.
Okay, thank you. All right, I want to ask David about crypto because, in the alternative section, Mike Novogratz, who's a name very familiar to our audience, but also somebody who has, dabbled just in traditional finance, TradFi as it's known, and also in DeFi when it comes to crypto. Your thoughts after interviewing him for this book and about whether or not crypto actually has staying power, because he did make a lot of money and also recently lost a lot of money when it comes to crypto.
Yes, well, overall, he's ahead. He bought Bitcoin when it was very, very, very cheap. And now, while it's more than half below its peak, it's still well above what he paid for it. So he's still, has, I think, billions of dollars of Bitcoin. And I think he's doing okay. When I interviewed him, the market was a little bit higher for crypto. So I recognized the markets have come down. But my own view on crypto, and I don't own cryptocurrencies myself. I have invested in companies that service the industry because I think the industry is going to be around for quite a while. The people that buy crypto tend to be younger people. You don't see a lot of 70 and 80-year-old white men running out and buying cryptocurrencies. You tend to see a lot of 20-year-old and 30-year-old people buying it, or even teenagers buying it. I interviewed for my Bloomberg TV show the other day, Sam Bankman-Fried.
Oh, yeah.
He was 30 years old, worth at the peak $22 billion. I think it's down by more than half now because crypto's come down. He built FTX, which is a big trading platform for crypto. And his view is, my view as well, is that you tend to find investment trends started by younger people. And crypto is one that younger people have started. And I think they like it in part because they can trade it frequently, of course, but it has fluctuations, which makes them think they're going to make money and they're willing to take the risk about it going down. But also, the privacy associated with it. You're not dependent on, nobody else knows what you really own. The government can't take it away from you. I think a lot of wealthy people around the world saw what happened to the Russian oligarchs, and they're saying maybe I should put some of my money in something the government doesn't know I have, can't take it away. And there's no doubt some people who are trying to maybe avoid taxes and therefore they don't report what they own. There's a lot of reasons people are going to buy crypto. And I also think the people that are buying it to a large extent they tend to be very libertarian in many ways. They want to be counter to the government, and they've lobbied Congress. And I've had there are a lot of members of Congress who are Republicans who are listening to what they're saying. And I think it's unlikely you're going to see a lot of over-regulation from the Congress of the United States or over legislation on the crypto industry.
Do you own crypto, David?
I own companies or investments in companies that service the industry, like Paxos or others. But I haven't bought currencies myself, though in hindsight, I wish I had in some respects. And I tell people initially, when you go to Las Vegas and you gamble, if you're reasonably intelligent, you know you're going to lose money. But you say, I'm having a good time, I don't mind gambling and losing money because I've allocated a small amount of money for it. And so if you can lose 1 or 2 or 3% in Las Vegas, you can allocate the same amount of money to crypto. And if you lose it, you've had the pleasure of owning it and talking about it and so forth. But if you start putting 50% of your net worth in, that could be more dangerous for sure.
Well, David, we really do always appreciate all the time that you give us, and so appreciate you also weighing in on some of the day's news. David Rubenstein, How to Invest, his latest book, Masters on the Craft. David, of course, founder and co-executive chairman of Carlyle Group, host of Bloomberg Wealth on Bloomberg TV. Great read, and as he said, there's a diversity of voices within his book talking about investment theories and ideas and what they have learned in terms of their craft, their investing craft. Do you want to get back to FedEx, really our top corporate story at this hour? Shares of FedEx down about 14% in the after hours. FedEx withdrew its annual earnings forecast, said preliminary results for the quarter fell short of expectations, and so we are seeing the stock down. We mentioned the CEO saying global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and in the U.S. This is why the next round of corporate earnings coming our way in less than a month's time are going to be important.
Yeah, and as we think about what's to come tomorrow, Carol, we're seeing shares of other companies like UPS, Amazon lower in the after hours. This certainly is going to be a big story when it comes to tomorrow's trade.
Right. We'll keep a watch on that futures market, too, to see what kind of pressure we're seeing on futures as well. Just looking up real quickly, and we're seeing them under pressure. Have a good evening, everybody. This is Bloomberg Business Week.